Very good. I'm here with Mayor Bowman, the Prolecto accounting practice leader. Mayor wanted to share with me that he sees a recurring theme coming up in conversations with his clients and actually with the staff is the phenomenon of how NetSuite works with consolidated exchange rates and the impacts it has on its reports and the basic questions of how does this work? What's really going on? It produces a sufficient amount of confusion. While we're in gratitude that NetSuite has these tables, it produces some numbers. Where are those numbers coming from? How does this all come together? So he was going to help us understand that. Is that correct, Mayor?
Yep.
Okay, good. So perhaps you can give us an overview of what you see and where you'd like to take the conversation, because you're helping me understand as well.
Sure. Let me share my screen.
Okay, very good.
So this is the table, Marty, that you referred to before, where NetSuite shows the rates that are being used to produce consolidated reporting. As you can see, it's just one period. There's a from and to subsidiary, and these are different rates for every period. To give a little more background of this, just fundamentally, what is this doing? Let me just go to a diagram I've got that I think will help clarify a bit. The whole idea with consolidated exchange rates and consolidated reporting in NetSuite relates to entities that are on one world and that have multiple subsidiaries where the functional currency of some of the subsidiaries is different than the currency of the parent subsidiary. In NetSuite, each ledger is expressed in its function in the subsidiary's functional currency. It's also known as the base currency. So when you set up,
I'm sorry, is it also sometimes called the local currency? Is that the way you sometimes think about like what we're transacting at in that region?
Yep, exactly. Yep. Sometimes called the local currency as well. So let's say you've got a US dollar subsidiary, and they are owned by it's a euro subsidiary that is owned by a USD parent. So just looking at this section right here, I think is where we need to focus, where the entire ledger of that subsidiary is expressed in euro. And when you're consolidating, you have to compare those numbers, that euro subsidiary's numbers, to the other subsidiaries when you want to consolidate and see the whole group all as one. So obviously it needs to be apples to apples. You got to compare in the same fundamental unit of measure so that the numbers make sense, right? Just basic arithmetic. And so you have to have a way of converting this euro subsidiary's ledger into the USD currency, which is their reporting currency for consolidation. That's just the basic background. And so it's important to note, this has nothing to do with whether or not the source transactions are in a different currency or not. Okay, so these transactions that comprise this GL may be in euro, likely they are because that's their local currency. They may not be in euro. They may be in whatever currency there are. And NetSuite, of course, has the capacity to transact in multiple currencies. I can be a euro subsidiary and I still may have a USD vendor or customer. We're not talking about converting or revaluing transactions in other currencies. Even if we're just staying in my local currency and I have no revaluation needs, you still need to convert this entire ledger into the USD parent currency.
This is for reporting concerns.
Exactly.
Only for reporting concerns, and thus we're really talking about, as you summarize information for a period end, typically a month, it's in the summary of that information when you're looking at it from the consolidated report lens, and even when you want to target in that consolidated report lens what that one subsidiary did from the consolidated point of view. In your case here, you would say, I'm in a USD mindset. I could look at what my European subsidiary did in USD terms in summary, and hence it's in that perspective that we're talking.
That's exactly right. And the lens analogy is a great analogy because that's exactly what NetSuite's doing. It's really just as you look through that lens. So when you run your USD report, your consolidated report, it's like going through that lens and changing the numbers, changing the amounts from euro into USD. Okay. Doing that with a technique. So the way it does it is, as you mentioned, Marty, it's got these internal tables, and that's this table right here. or we're looking at one period. And then there are these three rates in here: current, average, and historical. And this is something that the GAAP, general accounting principles require. International accounting principles have similar rules around this. Certain account balances need to be translated at a different rate. Typically, the way it works is most of your asset and liability accounts use the current rate, P&L accounts use the average rate, and most equity accounts plus some asset accounts also use the historical rate. So there's different rate types for each account, for each account type, really.
And before you leave that, what I seem to be missing here is, what is my to and from rate? I don't see it here.
So the from and to are these subsidiaries. And you don't really see it here, but this is a Canadian dollar entity, and this is a USD entity. Okay, so it doesn't really show you that, wait, what currency am I going from and to?
But it's the currency that's defined for those subsidiaries. So if you know those, that you would know what this historical rate is. Very good. Or what these rates are. They should make sense to you.
Exactly. Yes. Yeah. So it relies on the user to kind of know that in the background. So just coming back here real quick. And so there's our table. NetSuite does this lookup, and that's what's translating the ledger from the local or functional currency into the consolidated currency. And what's important to realize is this is being done in real time when you run a consolidated report in NetSuite. NetSuite is not actually booking transactions when it's doing this conversion. It is just simply the lens that it's looking through when it runs the report. So it's referencing these tables and multiplying the GL for whatever relevant accounts they are, right? So some accounts are going to be looking up this rate here. Some are using the average, some are using historical, and it's producing those numbers in the consolidated report based on the rates in this table.
Weren't you able to, when you go over to the accounts, you can actually see isn't there some definition that says which one this will be used on?
That's right.
No.
Yes, it is. It is set on the account. Yep. So on the account record, there is a field that holds that value. It can be changed, and there's a default value in there based on the account type.
I see.
When you have an account type bank, by default, NetSuite's going to use current rate because that's the standard rule. But companies can change this if they want to. The area that I see most often where it changes fixed asset accounts, that's really where I see it. Some use historical, some use current, I would say. But yes, it is a field in here. So
this is where, as it looks through the account, it looks like this is current. Now it knows which one to go get in that rate table.
Exactly. A particular challenge that companies have is understanding the average and historical rates that are in this table. The current rate is straightforward. So the current rate is going to be the exchange rate at the last day of the period in question. So current rate is going to be whatever rate NetSuite has in the system for that final day of the period.
And it presupposes also that NetSuite has a way to generate this table. I see something that says calculate, but I don't see a button on there. I see it up there, and I see
That's right. That's right. So if we go to this is a closed period, so it's not going to show it to us. But if we go to an open period, that button is now available. Mm-hmm. And so you can click that calculate button, and NetSuite's going to run an engine somewhere that's going to give us these rates.
Okay. And this is a nice feature of NetSuite to go get these tables. But at the end of the day, we have control over these rates.
We do. Yes, we can edit these and override these values.
Okay, very good. Okay, so you were saying current rate they get at the end of the month. It's the exchange rate, I guess, that would be in NetSuite's exchange rate tables that did nightly.
That's right. So there's in the lists accounting menu, there's really two tables that speak to this. So the one that we're looking at now is the consolidated exchange rate table. That's right here. But what NetSuite does to produce the current rate is it looks up the rate using the standard currency exchange rate table. And most companies are using NetSuite's automatic lookup, right? They've got their rate provider. And so if we were to look up the rate on Jan 31st, and we would go from Canadian dollars to USD, that would be the rate. That's actually the inverse. So let's look the other way. So USD to Canadian, 690265, that would be where it gets the current rate from. And It's intuitive to most people, right? Because it's current means at period end, and that's the rate NetSuite's going to use to translate accounts that are flagged to use the current rate.
That makes sense. The bank account makes sense. It's effectively cash.
Yeah. So I need to know what my real value is expressed in my consolidated currency. So it makes sense to value that at the current rate. An important to note about the important thing to note about the current rate, as opposed to the other rate types, is this is valuing the entire balance of whatever account is being valued that way in whatever different period it is. So if we go back to that bank account, that's what's going to take whatever the balance is in this account as of Jan 31, as of the period end, and it's going to take that entire amount and translate it using this current rate. So it's not using each month's movement. It's not looking at activity. It's looking at balance. Balance really means inception to date. It's everything. So everything's being valued at month end, similar to the concept of currency revaluation, which like I said before, it's really a different concept, but there's convergence there in terms of the, I guess, approach or philosophy behind what NetSuite's doing. Where clients have difficulty is understanding what these rates are doing. And I'll focus on average because that's a P&L thing. There's always activity. That's really where usually the questions are coming from here. Now, the first thing about the average rate is that as opposed to the current rate is that NetSuite is not taking the entire inception to date balance in these accounts. It's not taking the year to date, like P&L. Often you think about year to date. It's not taking the year to date amount every month. Each month's delta, so each month's activity in a P&L account is valued or translated at that period's average rate. So if I were to run a consolidated P&L for year to date through March 2025, what you'll see in there is that my March amounts are translated at March's rate. My February amount, my February movement remains translated at the February average rate, and the January movement is translated at January's average rate. So it's almost like this is permanent in terms of that period's activity. So even no matter when I want to report into the future, the numbers that were in the January P&L are going to be translated up to the consolidated currency using January's rate. And that's going to remain true in retained earnings as well. That's forever. So whatever numbers comprise that January P&L impact, which in years in the future are now going to sit in retained earnings, remain consistently valued at January's average rate.
So you're trying to contrast that to the balance sheet, because the balance sheet is a not historical. They have to go all the way from inception, roll forward to the current value. And hence, when we're doing this current account, the assumptions in the report are basically taking everything and wherever you land and putting it at the current rate, which is really not the reality of how it moved, but that's at least how the report tries to do balance sheet accounting, as opposed to the average is it's trying to hit the times and the period lens in here.
That's exactly right. Now, the challenge people have is understanding where this rate comes from. And so what NetSuite does is it's a weighted average. Now, what weighted means is it's taking daily activity in the period that we're looking at, and it's looking up exchange rates, each day's exchange rate, and weighting that exchange rate by the volume of that day's transactions. And that volume bit is important because it actually doesn't matter whether it's debit or credit. It's taking the absolute value, the integer, like what that number is, to understand the weights. If I have a very large transaction on the last day of the month, it doesn't matter if it's revenue or expense, if it's credit or debit, it's going to take that. If $1 million is large for that company, the weights are going to be heavy in terms of whatever the rate is on that last day of the month. So it's going to look through those numbers and create that weighted average. Now, the question becomes, where does it get those daily rates from? Because the rate in this table is just this 1 month. That's the result of something. And what's also interesting about it is, like I said before, it doesn't matter if the source transactions are in the functional currency or not. So even if those source transactions are actually in euro, which means that the exchange rate on the transaction is exchange rate of 1, because it's got to hit the ledger in euro, it somehow is finding an exchange rate from euro to dollar on that day to get my weights of how I'm going to figure out my weighted average rate is for the whole period. So what it's actually doing is it is looking up that same standard currency exchange rate table. And this is a daily rate table, right? This is 1 day. It's going to look up what it was on 102, and it's going to find that rate for the currency pair in question. It's finding that rate on that day to produce. This is 102.
Oh, okay. So
Refresh.
was it knows the daily volume of activity because transactions are dated by the day. But the euro transactions in that subsidiary have an exchange rate of 1, basically not it doesn't have a currency. It's basically 1. It doesn't matter. It's constant. But as it translates over here, it has to say, well, you could have had a bunch of transactions at the end of the month, and you could have had none in between. And so it's just really has to respect the daily effects of that. And each day has a different kind of volume, so it has a different kind of impact. That's why it's weighted.
Exactly. And the curious thing about all that is that often people are trying to see what is the value of this transaction, this particular transaction on a given day in my consolidated currency. Different clients have different orientations about what's the role of their consolidated currency. Many of them have a period orientation, which really is NetSuite's orientation. When I produce that periodic report, it's going to look up the table in real time. It's going to give me the whole P&L, all kind of expressed in a consolidated currency. NetSuite is not down at the transaction level in terms of how it expresses it. So it's very hard to see if I look at any given one transaction and I want to know sort of, well, what's the consolidated impact of this transaction? You really got to wait till month end to see that. I mean, you can do it mid-month, but mid-month, the table's going to not be calculated yet. It won't know yet what the average is. So it's just going to be defaulting to the system defaults, which I believe would be the prior month's rate. Right. So mid-month, it's really hard to interpret. Like often those are the clients that are leaning towards something called multi-book in NetSuite, which is a completely different way of doing this, which is a parallel set of books. And you actually have a running ledger in 2 different currencies. But that, again, is not what NetSuite's doing. Right. So it's periodic oriented. But at the same time, the calculation that underlies this number actually is a daily lookup. But NetSuite's doing those lookups and that calculation when you click this button, calculate. It's not happening as you go during the month. It's happening at month end. It's like looking back and saying, here's what happened during your month. Here's your volumes, your daily volume, and each day's volume. Here's what the rate would have been if we were looking up the standard daily rates. And then it's going to produce that weighted average based on that.
So it's convenient. In some respects, the daily rate would allow you to take a day's transaction, and you could use this as a rate table to translate if you wanted to.
You can, but what you're going to see, though, if you would do that is what's the contribution of this day or maybe this transaction to my weighted average rate? That may not be what it looks like when I drill down at month end and I look at the detail of that account, because NetSuite's taking, as you started, right? It's taking the entire, let's say it's a P&L account, take revenue. It's taking my entire January revenue and translating it multiplied by that January average rate. And when I drill down, it's going to be expressed using the same consistent rate for the entire January.
So while it's not intelligent, the reports aren't intelligent in that they say, okay, let's forget the average rate now. Let's go back and calculate. Let's go back and look at the daily rate and give it. You'd have to do something else to see that.
Exactly.
This is just the way the lens is trying to express what's happened.
Precisely. That's right.
Okay, I can visualize that.
Okay, so it kind of creates confusion, and especially clients that there was more than one way of producing an average rate that is acceptable according to accounting standards. There's other ways of doing weights. There's other ways of doing the averaging, and so clients that are not familiar with what is NetSuite doing are often lost. And then typically this question comes up in the context of an audit. So an auditor is coming in, they're looking at the consolidated financials, they're looking at each subsidiary's financials, and they're saying, okay, I see your P&L numbers are translated here. How did you get from your functional currency or your local currency to the consolidated currency? And people are at a loss. They may know about this table, so they'll show the auditor, well, this is what NetSuite gave me. Some auditors are more curious or more probing. How did NetSuite get this number? How do I know this is accurate? Especially if there were things like I mentioned, like a very large swing on the last day of the month, it's going to skew the numbers heavily in one direction. And they may say, this doesn't make sense. The rate, the exchange rate at the end of the period is X. How could your average rate be so different? And people are at a loss to really explain, how did this happen, right? Where does this
do you believe you had the explanation? Do you actually have tools that could actually reveal, like come back and calculate and get us to this number?
Indeed, yes. I was able to create a report that shows where this comes from, shows those daily weights, and ties out at the end to the actual number in this table.
Awesome. Is that something you're going to show?
Yes, indeed, yes. And so I'm using our query renderer tools. Of course, before SQL came, or before we were able to use SQL using SuiteQL, this would not have been possible. You cannot do this in saved searches. As far as I can think, I don't think there's a way to produce this in saved searches, but we've got this query that shows it. So let's just take this example. I have some filters at the top. I'm selecting the local currency. Okay, so this is the Canadian dollar subsidiary that I'm looking at. And I tell it what currency I want to convert up to. Okay. Now, I can actually do the math on any currency in the system. It's just meaningless for currencies that you're not consolidating up to. As long as these tables exist, we can do that math, which might be an interesting, maybe use cases why a company would want to see that. But in any event, I'm converting from this subsidiary and I'm telling it what currency I'm going to consolidate up to. I give it a period. Now, again, it's one specific period because the whole idea, the whole way that NetSuite uses the average rate is it's one period at a time, always. It's just the delta of that period. So I need to look at one period at a time to get the number that will make sense. And then I select the rate type here. It's either average or historical. Talk about historical in a minute. Very similar calculation. And then I run the report. And then what the report does essentially is it finds the volume of each day, of really each transaction throughout the month. And I do my lookups to the standard exchange rate tables to find what that rate would have been on that date. Okay, I'm actually doing the inverse because the way it's expressed is going from USD to Canadian dollar, and I invert it to get from Canadian dollars to USD, and I get a net amount in the base currency. Here I am showing the debit or credit, right? Credits expressed as negatives. I convert that to just an absolute value because I know that that's what NetSuite does to get its amounts. And then I produce weights. So I'm taking the absolute value of the transaction multiplied by that day's exchange rate to give me a weight. And then at the end,
it's almost like you're taking you're timesing those things together, and that'll give you a weight. And when you add all these things up, you can see at percentage terms how much 159 is relative to the total.
Exactly. Well, what I do is I do sort of a sum product at the end.
Okay.
And let me just scroll down because I showed the formula down here just to make it easier. So the rate formula is the sum of C over the sum of B. Now, what that means is, right, the sum of C, so the total of the weights multiplied by the absolute value to get my weighted average. So let's scroll down there. And I come up with this weighted average rate, 0.609, 6906227. And again, this is looking at the January 2025.
Yep.
And then when I go back to this table,
there it is. So great. And you're saying, okay, let's go back to that table.
Mm-hmm.
And go with this. Yes. Okay. So let me ask a couple of questions. First of all, you're demonstrating this through our query renderer tool, which is the tool we give all of our clients. There's no charge for this, but it effectively uses NetSuite's SuiteQL SQL to be able to craft the SQL, get complete control over the creation, the filter systems, and so forth. And so this is something that you crafted that allows then for our clients to go back in here and output this report, which gives you a report. You can download it and do what you need to do with it. And when clients see this, is this oftentimes what then produces the satisfaction to help them understand better and help auditors understand?
Totally. Yeah, I think so. I think that it gives the clarity of what it is, right? You can kind of see each day's transaction. And especially if there were a large swing in here, you'd be able to see that pretty quickly, right? Oh, okay, I see this large transaction here. That's going to be contributing a lot to my weighted average. And that occurred on a particular day. And that was the rate of that day. And that's why it's swinging, in one way or the other.
And then, of course, anybody could drill down if they want to understand, but at least now it's clear the algorithm and it feels like it grounded it.
Exactly. Yeah.
Okay, this is awesome. And so maybe then since I see how it came together, that was average and I could see the day, I can actually see the math. What's the historical? How does that work?
Historical is very interesting in NetSuite. The idea of historical, at least in concept, is it's supposed to preserve the rate when that, let's call it asset liability, or really equity transaction came into being. And yet what NetSuite does is it actually is this exact same calculation that it does. So it's actually producing a weighted average for the month that transaction occurred in. Let's make it more specific. Let's say there was a fusion of capital in a given month. So the investors invested a lot of money in a particular month. Those equity impacts are going to be translated into a consolidated currency based on the weighted average of those historical rate account types in that period. So basically, it's going to take, just for simplicity's sake, let's assume that the only account types that have the historical rate type, right, defined on the account record in here, let's just say they're all equity accounts. Those are the only ones. NetSuite's going to take all of the equity account movement in that period and produce a weighted average just of those accounts.
Ooh.
So the only real distinction between average and historical is which accounts are participating in the calculation. It's still actually a weighted average, but they're called historical. It's only those account types that are sort of weighted together.
So in theory, that would mean that, like in your equity example, the scope is smaller because on average, we're talking about the P&L. So there's the scope is much larger. But I suspect you're doing the same thing over there on the average side. They're not bringing in if I had a transaction, which was basically I'm going to transfer funds from one bank account to another bank account on a given day, it wouldn't participate in this average rate type because those are deemed current.
Correct. Exactly.
This is same algorithm, just
a different population of what it needs to look at. So
okay, that makes sense.
Kind of see here, the general rate column, this just shows that rate of the account. And then when I select average, it's all average. That's all it's looking at.
So if we did historical right now, it's where the accounts have the rate type historical. And
that's right. No, exactly. Let's see if there's any values in there.
Any transactions.
May not be transactions in that period.
Indeed.
There, right.
Okay, that makes a lot of sense. So it's the same algorithm.
Yeah.
This is awesome. So now we have an explanation, and you have, when meeting with a client, what do you often do? They have first, it almost sounds like you need to give them this conversation. And then we made it easy by doing what? By installing the tool, or what's the typical process you do?
Yeah. So the conversations usually start off with confusion around the consolidation process in NetSuite, CTA, cumulative translation adjustment. They're trying to just understand fundamentally, what is NetSuite doing? The questions will sometimes come up as, well, I don't have any foreign currency transactions, or sometimes they're coming from the opposite direction. My transaction was a USD transaction, and I know my books are Euro books, but I'm consolidating back to USD. So shouldn't the amount of the transaction tie out to the end? Right? They're confused about the distinction between the transaction currency and consolidation, and also they're confused. There's just a lot of confusion, which is totally understandable, right? It's a kind of difficult concept, kind of complicated. And I'll show them a diagram like this. We'll go through this and explain, well, here's what happens. Starts off in a USD transaction. There's a transaction rate, hits the ledger based on one type of currency exchange, right? That's the transaction currency. You ultimately end up with a Euro ledger, and then we get into the whole translation concept. So we'll talk about that. And then indeed, they'll sometimes say, okay, well, how am I getting to this weighted average rate? The conversation will often steer in that direction once they understand the concept. And they're like, okay, well, here's the query. And you ask how we get it in the environment. Well, it depends. If they're a client that has the query renderer tool, we'd give them the port as just a definition of the tool, put it in the environment. And if not, we can, at a very basic level, just provide them with the SQL query, which they can use those other query tools. Of course, we've got our filtering function that you have to sort of work around and put into the query what those values should be. Sorry, not wrong page. But you'd have to put in the placeholders for our filters that essentially we can give them something as simple as an actual query that then, if they're good with SQL, they can run with this, use whatever tool they're using for SQL to produce something like this.
Okay. Yeah. So this is awesome. So this is the SQL that you crafted that allows this to come together. The tool does the expression to make it convenient, but this is where the hard work has been done to back into NetSuite's algorithm and ground it out by creating a new ability to see things by the day and by the account. I see.
That's right.
Okay, awesome. Okay, great.
We hope you found these insights helpful. If you're ready to get more out of your NetSuite investment and unlock untapped potential in your business, start your journey with Prolecto. Contact us today.